Manor Farm is a massive 16-bay Osprey EV public charger, lies totally empty, deserted. Instavolt's massive new hub in Winchester, with 44 bays, lies empty, and they've slashed their prices to off-peak rates all day and night. Still it remains empty. The list goes on, and when I asked my viewers for possible reasons why so much money is being poured in with such little return, the overwhelming answer was land banking. They were buying up the locations and getting ready for the day when another few million EVs were on the road, and actually queuing up to use them all at whatever price they charged. But after much more research and several interviews with CEOs of those CPOs, I've since concluded they're probably wrong. I now have another scenario that is really rather scary. I'm Dave, this is Dave Takes It On. Well, land banking dates back to before the supermarkets got involved in a massive way a few decades ago. With a rising population and us using supermarkets far more than they originally envisaged, land banking makes perfect business sense. Non-morally, but which business acts morally these days? Well, the concept is really simple. If you foresee that the demand for a new supermarket in a particular town is not quite there yet, but will eventually be, then locking that town down to your brand is a really good tactical move. You buy up or lease the land needed. You apply for planning permission, but you stipulate that the project is only financially viable if you do not have loads of other supermarkets opening up in competition. You then offer them the carrot, that's to carry out the road adjustments that your new supermarket will need to get traffic off the road into there, entirely at your own expense. And that's normally paid for by the councils, that they're all rather cash-strapped at present. And if you hit a snag, then just threaten not to build it. That'll lose hundreds of jobs locally. But finally, when you do get a planning permission, you put the bulldozers in, you clear part of the land, you put in a few drains, and then just abandon it. You see, planning permission lapses if the project is not started within a short period of time. You've just started it. So the time restriction can actually be annulled, no longer valid. You can just sit there with the land for as long as you want. You don't want to build there, but you don't want any of your competitors to be able to build there, even if they want to. You've locked down the town. Now, in this way, supermarkets control their customers and their businesses. Land banking, EV public chargers might be underway, but in a much more benign way. I doubt they have restrictive clauses built in, but any new CPO looking at a nearby plot of land will very carefully determine if it's financially viable. Nobody wants to build one right next door to someone else, particularly not if they're cheaper, because all you do then is start a price war. Now, with much funding and tax breaks now coming from our UK government and loads of additional funding flooding in to jump on the renewable bandwagon before the money runs out, there must be a case for build now and reap later, land banking. Oh, by the way, our fantastic oil industry still gets massive tax breaks, totally billions of pounds. So all those of you who want tax breaks and subsidies for EVs stopped, I totally agree, only if it applies to that lot as well. You would think that after 100 years of drilling and screwing up our planet, the fossil fuel industry would actually have a business that does not rely on government handouts. Oh, sorry, forgot the legacy auto industry works exactly that way. Anyway, back to public EV charging. Most investors in any industry will not expect instant profits. Investments are, by definition, investments. They take time to build up to profitability. So investors often have a multi-year timescale before they start really examining their returns in detail. And we're very much in those early years. Investors are still happy to wait, and many will not know anything much about the industry they've invested in. See, all it will be often is just a part of a fund bundled with other investments and different industries. Maybe all of them themed as renewable, but where EV public chargers are but a small percentage. Realise also that when a fund invests in an industry like EV public charging, the investment is rarely in the form of suitcases of hard cash. It more often comes in the form of guarantees for loans, where the industry takes on new loans, the CPO that is, backed by investment funds, guaranteed by them, but they very rarely put their hands in the pocket. Finance is a hugely complicated business these days. The long shot is that many of these investments are not yet looking for a return just yet. And many of them will have no idea behind the reasons why the investment fund or the private equity fund or the pension fund deemed this to be a good investment anyway. We probably have a great number of investors sitting back in total ignorance of what is actually happening out there on the roads and in our EVs. That's where I come in. I have very little knowledge of finance other than to know that making a profit's good, losing money's bad, paying back your loans on time is good, and not being able to pay them back on time is very bad. Someone, somewhere, if they get it wrong, ends up picking up the tab. So at this stage, plans will still just be plans. I doubt too many people are looking at exact returns to what is happening out there in the real world of EVs. And that's where it gets really interesting, because if they were all EV drivers, they too would be spotting the changes that I am now seeing on a very regular basis. Most of them won't be EV drivers. Most probably invested because they got a cold call from their regular investment advisor telling them, get in quick because they've just got off a lunch party at this latest green fund that's really going to go places. Oh, by the way, we also get extra commission for anyone who signs up early. Yeah. So what is happening is fascinating for the EV industry, and I believe cataclysmic hurricane for the investors. The BYD recently announced they've developed a new battery, offers a realistic, real-world range of an EV to be nearly 700 miles. And in the competitive world of battery technology, which is still in the Wild West stages, Huawei just announced they too are working on a new battery to go in the newly announced new EVs. That will be the first EV with solid-state batteries, and it's capable, if they put in a normal-sized battery pack, of achieving considerably more than 1,000 miles. In fact, they actually state 1,875 miles, 3,000 kilometres. And the happy investors see this as a massive boost to their investments. 1,800 miles on a single charge, but not only that, it also recharges fully in less than 5 minutes. See, these are the two holy grails of EV sales results. And the more EVs that are bought, the more the investments into the EV charging stations will pay off. Top two reasons why people don't want an EV: a pathetic range and takes hours to recharge. If they can now drive further than their existing petrol car, in fact, 3 times as far on a single charge, and then top it up in 5 minutes, these things are going to sell loads of them. And the investment would be like the goose that laid the golden egg. Golden. But unfortunately, I see a very different scenario. Being an EV driver and researching EV public charging, as I do for the channel, I see, yes, we definitely want this. We definitely want this charging and the charging speed and the range. That range would be amazing, and filling up in quicker time and filling a petrol tank, yeah, it's great. But can anyone else see the two massive, immense, world-altering snags to rain on their parade? I'll give you a minute or so to think about it. You thought yet? Okay, first let's look at the 1,000-mile range and the average driver. That's a whole month's range. That means they only have to charge a single time once every month, and it's only going to take 5 minutes. Okay so far? Let's move on. No EV today can charge at that rate. No EV can give them that range in that time. And no EV charger already in existence can provide the power that will give it that much range that quickly. We're going to need a whole new range of EVs with a bigger maximum charging speed, around about 1 megawatt, coming onto the market. None out there yet. And we're going to need a whole new range of 1 megawatt EV public chargers and above, and being needed to charge those new EVs. And yet, these EVs are already on the way. Many new EVs arriving later this year now are offering 500 to 600 mile range, fairly standard, and the first 1,000-mile range EV is not that far away. So what's our smart investor overlooked? Well, They've invested in a company which spent all of their money that they've invested installing EV public chargers rated at 200 to 300 kilowatt maximum. They cannot meet future demands from the EVs that we could be pulling into them to charge in a year or so's time. But worry not, BYD has announced already that their new charger range, it's out there and they're already installing them in China and shortly in Europe and UK. See, all the CPOs need to do is rip out, discard and replace all the old 200, 350 chargers they just bought and go and buy and install these brand new ones. Oh yeah, and that will be before the chargers that your investment paid for have broken into any profit. Any bets what answer a CPO will get when they say, look, thanks very much for your $250 million investment recently. We've spent it all, we've put in charges, but they're not going to be big enough anymore. We need to rip them all out and start again. Can we have another? Well, we don't need $500 million because these are more expensive. Can we have $1 billion this time? I'd love to be in that room. Now, in reality, it's probably not quite that serious, not quite that bleak, but not far off it. First, you say, this is all going to take some time. After all, it's only in the last 5 years that anyone's been installing much above the 50 kilowatt electric highway chargers that today are destined for the scrap heap. They're only used by EV drivers in total desperation. And there may be some workarounds. I do know that many modern EV chargers are capable of having their power supply modules replaced with more powerful ones. But there will be other restrictions, such as cables, which cannot cope. See, many of these, you can maybe upgrade bits of them, but the whole lot, it's often quicker, cheaper and easier just to put the new one in. Well, this should all get quite interesting. Oh, by the way, on the channel, I run a fancy EV virtual share portfolio and recently bought virtually some BYD shares, and they're proving to be a great investment already. There's no money changing hands, by the way, no real profits. It's just fantasy. It's a virtual portfolio operated as a fantasy so others can comment on it. But back to business. The world that the funds invested into and persuaded their clients to invest into is changing faster than they can keep up. I have my serious doubts if any of those original investments, like into GridServe, Ionity and Osprey, will ever see a true positive profit. And I do also wonder what the CPOs will do when their investors pull out, demanding that this specific investment is not being allowed to drag down the rest of the overall portfolio. But the situation is, in reality, far more dire. Has anyone thought about EVs having a 700, 1,000 or longer range? It would mean that any and every journey we make in the future can be completed from home. Charge up at home, off you go, don't need to stop. On the way back, don't need to stop. We would serenely sail past all of those brand new super ultra rapid motorway service chargers without a second thought. And if we did stop there, it would not be to charge the car. It would be just like stretch your legs, go and have a pee and have a coffee. We would not need to top up. Imagine going from Liverpool to Cornwall, stopping off at Exeter just for lunch, don't use the chargers and having used only a quarter of your battery capacity. Then drive all the way down to Cornwall, you get down there, still got well over half a battery, you complete your business or your holiday break and you return home, stop at Exeter for dinner on the way back. Wonder how many of those chargers you will pass on that journey that nobody will any longer be using. I think many of them are being caught out. They've jumped in the early days. Too many people didn't understand EVs. And I think now there's an awful lot of them going to come a cropper. That's my opinion. If you think different, please leave your comments down below. Land banking, yeah, it's a possible answer, but that relies on being a massive demand when eventually you want to use that land. What about the possibility that by the time you want to use that land, those chargers you installed a few years earlier are now out of date and not being used because just round the corner on the motorway, someone has installed a new 1 megawatt charger? Interesting question. Let me know your comments and let me know where you think the EV charging industry, the public charging industry, is headed. I'm Dave. This is Dave Takes It On.